Good weekend all. Ira Epstein, and here we are with your financial market wrap-up, your weekend edition, where we're going to look at first a monthly chart and then all the rest are going to be weekly charts. And this is for Sunday afternoon. It is January 5th, 2025. The United States is in a deep freeze. Cold weather moving everywhere, even down south in a big way. Big storms happening throughout the United States as well, but it's the first full trading week of the year, or is it? Not really. Remember, the markets are going to be closed on January 9th for observance of President Jimmy Carter. So you got to take this all in and understand we're still not fully back to normal, but it's not like people go away for that. So they're back at their offices. They will be looking, and where they can trade, they will trade, in my opinion. Now, in terms of news, we start off tomorrow morning with the S&P Global Group with their final U.S. December service sector PMI at 845, and then we'll get November factory orders, and that'll come out around 9 in the morning. So there's not much more than that. Because I'm doing this today, we couldn't do it yesterday, I've extended the sale. We talked with my IT department, and we've got this up. It'll go off Monday. And it'll be late Monday that it goes off. So if you haven't taken advantage of buying the charting course and getting the free Bollinger Band or outside day course at a 50% off discount, it's $299. You save about $596 on everything that we've got there. It's a great time for you to do it. You get the charting software, you get one of the courses, you get the research. We'll make sure you get ETF, Spider, the futures, everything that you can imagine will be tossed in there. If you're a current subscriber, you've already got it. But if not, you get the education part of it. And remember, you can take these courses whenever you decide. You can give them away. That is your call. You simply go to iraepstein.com. On the top left, you will see charting courses. That's where you go with it, iraepstein.com. There'll be a cursor up here as well. Okay. So let's go back to the chart and see what we've got. As you can see, you've held up pretty well. You're not at all-time highs. You've backed off a little bit, but it's early in the month, all right? We're only at January 5th, so keep that in the back of your mind. So far, the break has been contained and didn't get back under the 18-week moving average in red at 58.7122, but the market did finish off down almost 0.62% on the week. As you can see, the market's been having trouble at this top up here, and the pattern is one of lower highs and lower lows. That's the definition of a downtrend. Now, it gets filtered by looking to see where the market's at in relation to the 18-week average. When the market is over that, you can have the trend down, the bias up, the two fight each other. Close under this number, 58.7122, you got a problem. Close back up and over last week's high. Then you start a market that might want to go up and head back towards the upper Bollinger Band, which is right now at 6208. But getting up there hasn't proven easy. We're going to get a lot of data coming out. We're going to get an awful lot of jobs data now coming at you. Then after that, the CPI, the PPI. I think we get this week, if I'm right, the Fed notes. So we'll see in December what they were talking about. And of course, we have a Fed meeting coming up, but the market widely expects that the Fed is going to sit pat at this particular meeting. When we look at slow stochastics, you lost your momentum, but the market's already come down and challenged where it should, the 18-week average, and now the market has to figure out on the regrouping, up or down. We're right at that important point. You're trying to do that in the Dow as well. Notice how you've got lower highs, lower lows, but you're refusing to stay under the 18-week average of closes. I'd actually get bullish if you got over 43,746, but stay under that 18-week, and I'm in the bear camp, and you can get more of a correction in the market. Again, at a very important set of numbers. Not quite that way in the NASDAQ. You haven't challenged the 18-week. You did lose your upside momentum. The market should have pretty stiff resistance right here at the 2260 level. And from where you're at now, just remember, from here, that's 22,260. It's 700 points away. That is not a stone's throw. It's a pretty good sized move that has to happen. The Russell maintains the one position that maintains the bearishness to a degree, but not completely. While the trend is down, you here too don't want to seem to want to stay under the 18-week average. And if the market gets over 2304.80, I can make an argument on a weekly chart you'd have higher lows, higher highs over that number. There's a reason to be bullish, and then looking for the potential to get back to the 2464 zone. So interesting times there. I'm not seeing anything bullish other than maybe you can say that you're getting a bit oversold, but are you embedded? You had both numbers under here, 20. The week before the numbers were under 20, and the week before they were not. This is the key week. Do we see a market that gives a good bounce and refuses to embed, or does it embed? You're getting closer to a crossover where the 18-week is getting under the 100-week, and the same thing happening here in the 10-year note. Then in the dollar index, even though the market backed off from the week's highs, it got up, as you can see, to 109.21. Big deal. You finished the market just about at 108.80. Market's still looking strong. Dollar wins over all these currencies by default. Still a strong economy. Good jobs gains I'm looking for. I don't see anything real bearish coming up in it. And I can make arguments for lower prices just off the same argument in the euro. Is the market going to embed here? Well, both numbers, again, were under 20 this week. They were under 20 the week before and the week before. They're fully embedded. So this market, to me, on good rallies, is still a short sale. The Canadian dollar's embedded. This market's still a short sale on good rallies, but I want to make something clear. I don't want to first see this week that we just ended lows taken out first, and then you begin the rally. I'd probably pass on then trying to sell into that rally for a week or so. If you take my outside day course, you'd learn why. In the Japanese yen, you're not yet embedded, but you keep coming down hard on this market. Bitcoin's void of a trend. Momentum is trying to turn down a little bit. You have now a higher high, lower low on the weekly chart. You've narrowed in the 255 and the difference between Brent and WTI. Just in November, you were at a $5 difference. That's been cut in half now. But you do have bullish postures in all the energies right now. Higher lows, higher highs. So until you take out 2 weeks ago's lows, I can make an argument that wherever the Bollinger Band comes in, because it'll drop this week, that should be your resistance point here. The WTI still bullish. Gasoline, until you take out this low, you can go a bit higher here. So as I'm looking at all these markets, I'm finding them real interesting. So again, if you want to take advantage of the sale, remember the cursor's up here, iraepstein.com, and I'll catch up with one and all come our Monday morning review, our morning flash. I'll see you there.